Welcome back. Buyers generally are bargain hunters when they first get started. Now, they probably don't have savings accounts or pension plans or IRA accounts or Roth IRAs, whatever. They don't have a lot of money, so they're all looking for bargains. So how do they buy a house with owner financing? That's what they really want. So bargain hunters, they may not qualify at the regular bank. Why? Because they don't have a high enough FICO score or they don't have enough income. So they're looking for a property that they can buy with owner financing. They're looking for low rates. They're looking for extended terms. In other words, installment sales. They need all that to be affordable because they're trying to grow their account. Now, the natural alternative for bargain hunters is to search for seller financing, which may be advertised where? Well, how about Craigslist? How about local newspapers? How about signs on the properties? All right. How about the multiple listing service? The point is, you need to search for those properties. Don't pass up the electronic websites because they'll show many properties that have owner financing. Now, sellers understand the availability of money is more important than the interest rate. So sellers now own the property, so they've got an asset and they want to turn it into revenue. So let's elaborate on this subject and see if we can get these two parties together. What we're really talking about today is how do you buy a house with owner financing? Okay, interest rates are important. People want to bargain about those. For example, banks are lending with very low interest rates and long terms. So people that have excellent credit, high FICO scores, they can get long-term loans at very low interest rates. Okay, the challenge is the banks have high standards. In other words, they say you must have a job and earn X dollars. You must have been on the job for many years. You must fit within our guidelines. And the bank determines all those guidelines. All right, entrepreneurs are a little bit different. They want to buy a house with owner financing. Why do they want to do that? Because probably they don't have a high FICO score, or maybe they haven't been employed long enough, or maybe they sense there's a good deal. So there are very few standards for entrepreneurs, but there's many standards if you're going to buy from a bank. So my experience in the last 30 years has been in the area of defaulted real estate, tax liens and tax deeds. Now, this is not standard real estate. Anybody can do it, but these properties are sold for pennies on the dollar. Now, this is something you can do, very inexpensive to get started, and it's taking place in all 3,000 counties across the United States. Every county will have tax auction properties. Now, these are unwanted properties. They're properties that have been overlooked by most people. All right, these are properties that the property owner did not pay the property tax, and guess what? The local government is confiscating them and reselling them. So the county treasurer does that. Now, why does the county treasurer do that? They're authorized by the legislature, the board of supervisors, and the county commissioners. Sell these properties, get them off the defaulted list, and get them back on the regular tax roll. Now, these properties are sold at 60, 70, and 80% discounts, and they're sold with no mortgage. So what question am I answering for you today? How do you buy a house with owner financing? Well, you have to do a little research. All right, now there's many different owners that allow you to buy with installments. So that means that's owner financing. They'll give you installment payments. For example, let's use mom and pop. They're interested in downsizing the property. They want a smaller living accommodation they don't have to work for. Now think for a moment. You know families where sons and daughters are back home living. You know where the parents are living in those houses. You know that maybe they fixed up the attic or they fixed up the basement. In other words, someone might even be living on the back of the house in a single bedroom. The point is, people are getting closer and closer, and people are selling houses, and people that want to sell, in many cases, if they're seniors, they need money to supplement their Social Security. They need money. So how do you buy a house with owner financing? Well, all of those people want to sell, and they'd like to sell with a contract, not necessarily a mortgage, but a contract that allows them to collect installment payments and allows you to buy with low down payment and installment sales. All right, now, if you have no money, you can bargain. All right, now be careful not to bargain too much, because if you get the interest rate too low or you get the price too low, they're not going to sell. But seller financing generates money for the seller. The seller might be using it because they're retiring. They might be using it because they couldn't sell the house otherwise. So what's important? Well, the price is important, the interest rate is important, and how you market the property is important. So sellers are willing to use seller financing. All right. Now, it doesn't matter whether you're an old entrepreneur or a young entrepreneur. Many entrepreneurs want to buy properties. They want to get a great deal when they buy them. Well, you can do that at tax auctions, because the auctions will sell properties 20, 30 cents on the dollar, which means you're going to get 60, 70, 80% discounts on these properties. But what do? They go and fix them. Well, they want to paint them, clean them, fix the bedrooms, fix the bathrooms, do landscaping and all that. Well, what if the market goes into a slump? What if they're trying to sell it and the banks have now shut down, they're not lending, and people aren't buying? What are they going to do? Well, they're going to have to offer seller financing. All right, so you want to buy a house with owner-seller financing. So you might be able to get a fixed-up house that way, because those people get desperate because they put all their money up to buy it, then they put more money in to fix it. Now what are they going to do? They've got to do something to get their money out so they can take care of their family. All right, so bargain hunters want what? They want low payments and they want low price. Well, owner-seller financing isn't necessarily the cheapest property, and it's not the cheapest interest rate or installment payments. However, it does get you in the business. And it gets you in the business because you're still making small payments and you're doing it with installments. All right, this is an option for anyone that owns any asset. So if you have a boat and you wanted to sell it, you can sell it with owner-seller financing. You can do the same thing if you had an automobile. You could do the same thing with your cabin in the woods. In other words, installment sales work to generate revenue for that seller. Many sellers want to generate revenue. All right, now as the population gets older, we're going to have more and more people that need to supplement their Social Security. So many of those older people will sell their house, so you buy it with owner financing, and then they get revenue to supplement their Social Security or their pension plan. In other words, they're looking for payments into the future. Now, you could be in that same business. You could buy at the auction, and then you could sell, and you could use owner-seller financing, and when you do that, you could then have payments. All right, what if you did that 4 or 5 different properties? All right, now selling assets and transferring the property, not the title, transferring the property has been going on for hundreds of years by using a contract for sale or a contract for deed. You simply contract with that person to give you a down payment and installment sales for 5 years, 10 years, whatever number of years you want, but you do not give them the title until such time as all the payments have been made. So think about that older couple. They're going to sell, they're going to get payments, but they want to secure it. They don't want to give the title to the new owner until they get all the payments. They just want to get retirement income by developing installment sales. All right, sellers advertise this, and when they do this, they accelerate their sale. So if you advertise that you have a property that has a value of X, but you'll sell it for less than that, that's buy low, sell low. But what if you now say, I'll do installment sales? That's another way to accelerate the whole process. You're going to sell with a contract rather than use a mortgage. That makes a lot of sense. All right, now think about what we're talking about here. We're talking about how to buy a house with owner financing. Anybody can do this, okay? It's absolutely legal to buy a property on a contract rather than a mortgage. Now, where would you get the contracts? Obviously, you could go to an attorney and you could have him help you through the process. You can also use title companies. They can help you with the buying contract. They can help you with a selling contract. They can help you with a contract for sale. They can help you with a selling installment contract. They can do all of that because they're familiar with what's required to put things in the county records. All right, now the amounts of the installments, the number of years, which is the terms, and who's going to pay the taxes and the maintenance and the insurance, all of that's in the contract. It would be the same thing if you were using bank financing. They'd include all that in the mortgage. Now you're just doing the same thing with a contract. All right, so it's important to understand owners want to sell. To accelerate the sales process, many will offer owner financing. And when they do that, you can get a mortgage and do it that way. I don't recommend it. I recommend that you use a contract. Keep the deed until such time as the contract is completely paid. All right, now all of this can be stipulated in a contract. It can be written in the contract that they're going to make installments of X, they're going to pay taxes, they're going to pay their own maintenance. You're getting the idea. They're going to pay their own insurance, and they're going to pay for how many years. So there's lots of examples of that throughout the course materials, many examples in this channel that you'll see exactly how to do that. So seller financing is using a contract, and that's valid in all states, and it's been in use for basically hundreds of years. All right, so I'm finishing up. Ultimately, you want to find properties that owners, sellers will finance. They are available on Craigslist. They're available on the multiple listing service. They're available in the newspapers. They're available in Penny Savers. You can search for those kind of properties even by driving neighborhoods, because people will put signs up front that owner-seller financing is available.